for joining us here. And for everyone else who is joining us virtually, you're welcome to this event. I will delve very quickly into it. Thank you, Professor, for a very excellent keynote speech. Indeed, there are so many things you said, and I was taking notes. A lot of it, obviously, resounding and stuff that causes pause for concern. In terms of the session, I think I would like to start with Mr. Audu Liman. And what I'll do is very quickly before we go ahead, I will just read out a brief profile of all the panelists so we are, familiar with who they are. So Audu Liman is the Chief of Party, United States Agency for International Development, USAID, addressing education in Northeast Nigeria at the American University of Nigeria. He will share perspectives on the lack of access to education and the challenges with providing quality education in some of the most vulnerable areas of Nigeria. He will also explore the impact of poor education on economic development, insecurity, and poverty. He will explain the measures taken by state and non-state actors in bridging the education gap in the northeast of Nigeria. Next is Ayodeji Ebo, who is the Senior Economist and Head of Research and Strategy at Greenwich Merchant Bank. He will also discuss the impact of the central bank's role in stimulating different sectors of the economy. He will discuss measures taken by the banks to improve credit in a bid to meet up with regulatory thresholds, while highlighting the impact of these on quality of earnings and assets. Fola is the Head of Financial Advisory at the AFC. He will provide insights on investments into key sectors of the economy that could bolster growth, thus solving poverty and insecurity issues. Taiwo, as co-head of Afrinvest Securities Limited, will provide insights on the performance of the equities market in 2020 so far. While Anhad, who is a CEO of Africa Plus Fund, an entity that seeks to capture the Africa growth potential in infrastructure by delivering superior risk-adjusted rewards through advising on projects, investing capital, and raising a dedicated infrastructure fund. He will share his insights on the role of infrastructure development in solving poverty, insecurity, and overall economic problems. Kola is the managing director and co-founder of Babban Gona, a social enterprise which serves as a network of smallholder farmers in Nigeria with a model created to attract youth. He will provide insights on how the pandemic and insecurity have affected agriculture, as well as strategies to mitigate the impact of all of these. So I will start with Mr. Liman. So good afternoon, sir.
Good afternoon.
And welcome.
Thank you.
The federal government estimates that around 14 million children of school age are out of school. In your experience, what would you say is responsible for this? And what is the impact of having so many young Nigerians without access to quality education?
Thank you very much. I also want to congratulate Afrinvest for this launch of 2020 reports. When I was listening to Ike and also to the professor, clearly it does look like there's two Nigerians. One Nigeria, which is the southern parts, we can see that from ENDSARS. The second Nigeria from the northern parts. Many people are still arguing why did the ENDSARS demonstration not catch on in northern Nigeria, while it did very well in the south. There's so many arguments. One key argument is education. The southern parts, for the most part, youths are educated, you say 94%. In the north, it's almost the opposite. So while the southerners could understand their needs and their rights, many of us in the north, these rights we're talking about are no rights, because we don't have the level of Western education to understand that governance is service. Governance is not a favor. I'll give you an example. In Zamfara State, where I come from, there was a delegation that 2 weeks ago went to thank the state governor for what? For paying salaries. And I said to my friend, who is the advisor to the governor, I said, why should they go and thank the governor? What has he done? What's so special about paying their salaries? Is that not part of governance? And the response for many of my colleagues, compatriots, was, you are speaking like a white man because you're from American University. Clearly, a complete disconnect. So educationally, until the north of Nigeria moves by any step, we are talking of two different countries, and insecurity will continue. The example that I gave of poverty, 80% of the poverty in Nigeria and more is in the north, actually. And we saw on the slide that just 20% is in southern part of Nigeria. Educationally, the indices speak about so many 40 million children out of school, but the key issue is even the quality of education. The project I managed, we did a baseline assessments, international global assessments that you do at primary 2 to gauge, to benchmark your education in terms of how many learners, percentage of learners that can read. The first baseline we did in January 2020, just before SARS, we had 3.5% meet minimum requirements. And minimum requirements is just to identify 3 letters, 3 words sentence, nothing more, in Hausa, not in English. So the global assessment allows you to test your learners in primary 2 in whatever language you have, because the research is that if your children can read in your local language at lower primary, they should be able to go 3.5%. SARS came and we did the assessment in October, just this October. The drop was now 0.9% can read in Hausa in primary 2. The learning gaps is just so huge that you cannot even comprehend how are you going to address that. And this is in an environment where most of our schools in northern Nigeria, teaching that is going on is not sequential, it's not supervised, it's not monitored. The quality of the teaching force is compromised by people who just go through university and get their B.Ed, or anybody who wants to get a job, they just say go to school and teach. So that continues to be the challenge that we face. And then you have a university system where for the past 7 months, there's no academic activities going on. I was saying to somebody, if I'm a youth in northern Nigeria, I'm going to not do ENDSARS, but do education SARS, because the American university and many other private universities in northern Nigeria are open. And our children, your children are in university, but the children of the majority are home, and they're not even concerned about that. They are more concerned about when is the next election, when is the next campaign, how can I get money to take drugs or get married, which is a priority in northern Nigeria. So those are the kind of issues we're dealing with in terms of the drive to education. So you can go to school and go to school and go to school, but nothing is happening in that school. And you have a situation where government teachers are sending their children to private schools because they know where they're teaching, there's nothing going on. So it's a very, very serious system that requires a huge investment to tackle. And we are delighted that there's an example in southern part of Nigeria where what you do with education, the difference is very clear. So we continue to encourage our leaders and our religious leaders who are very influential in northern Nigeria to say, just don't blame the South for moving so fast. Blame your governors. And why do you blame them? Because the same amount of money from oil, similar to your population, is given out to us. What have we done with that? Those are the challenges that I see in education.
Well, I don't know if to say thank you because you've painted an extremely dire picture. It's an extremely dire picture and it's one that is troubling. Perhaps I would therefore skip very quickly to Kola. Considering the work you're doing in the north of Nigeria with Babban Gona, could you even tell us what Babban Gona means, and then talk to us, first of all, about what prompted your initiative, and about the experience so far, and some of the learnings you've come up with.
Well, thank you very much. So Babban Gona means great farm in Hausa. And fundamentally, we believe that poverty has trapped many farmers in a difficult life, and we believe good, kind, hardworking people like them do not deserve this fate. We know if farmers follow Babban Gona's simple 3-step path to a better life, they will have a better, more peaceful life. Fundamentally, what Babban Gona does is Babban Gona brings together a community of investors and partners with enlightened self-interest that recognizes that when each of our lives is better, all our lives are better. To date, our partners include some of the world's leading investors, including the world's largest bank, KfW, the German Development Bank, the Central Bank, the Bill and Melinda Gates Foundation, and many, many others. Over the last decade, we have grown from supporting just 100 farmers to today, we are West Africa's largest maize-producing entity. We supported cumulatively over 110,000 farmers. This year alone, we are farming an area with our members of over 80,000 acres. To put in context, this is an area equivalent to more than 5 Manhattans. And we're producing enough food on that 80,000 acres to feed every man, woman, and child in Nigeria for nearly a week. Now, fundamentally, to accomplish this, we've had to become currently the largest direct lender to farmers in Nigeria, financing to date well over $50 million to over 100,000 farmers, and achieved a 99% repayment rate, which I think has fundamentally proven, we've been doing this now for going on a decade, that Nigerian farmers are not only one of the hardest working people in the world, but they can be one of the most trusted with such a high repayment rate. And it's quite unfortunate that we see such a very low proportion of lending to the agriculture sector. I think fundamentally, as an organization, the vast majority of financing that we've raised for the Nigerian smallholder farmers has come from offshore, due to the fact that traditionally, domestically, as I think the presentation showed, the reality is our traditional banking sector does not finance typically in very large proportions farmers. Now, to answer your question, why did we start down this journey over a decade ago? We asked ourselves a very simple question. When we started in 2010, we had seen the rise of not one, not two, but 3 insurgencies over the previous decade from 2000 to 2010. And we were able to trace the root cause of this rise in insecurity to a dramatic growth in youth unemployment, triggered by the fact that about 20 million youth had entered an oversaturated workforce from 1990 to 2010. And the simple question we asked ourselves was, well, if 20 million youth entering the workforce from 1990 to 2010 could trigger 3 insurgencies, the fact that 4 times that number, 18 million people, the population of Germany, the world's 4th largest economy, will be entering that same oversaturated workforce from 2010 to 2030, what would those individuals trigger? And so we committed ourselves to developing business models that would create about 10 million jobs by 2030, pulling together a community of individuals, investors, partners with enlightened self-interest, with that fundamental belief that if we can enable others' lives to be better, our lives will be better.
Thank you, Kola. That's been pretty insightful, and I would like to congratulate you on the work you're doing. I think it's such a yeoman's job, and well done. You did say something that I'll perhaps pick up on, and maybe I'll go to Ayo on that point. You talked about the lack of credit from the formal banking channels, getting across to the agriculture sector, which then, it engenders a question as to what exactly has happened, because over the last 4 years, we recognize that the Nigerian government has paid a lot of attention to agriculture, and the central bank has made quite a song and a dance about several agriculture programs, including the Anchor Borrower Scheme, the CAC scheme, and so many others. So Ayo, you're within the banking sector now. Can you tell us what exactly your perception is from that side of the table? What is it that stops the large institutional banks, deposit money banks, from actually playing actively in agriculture, perhaps even partnering with the likes of Babban Gona, who obviously have on the ground, boots on the ground, active field experience?
Okay, thank you, and thanks for inviting me. I think the very evident thing that we will still see that for most banks that makes them have some form of concern in channeling lending to the real sector, which I agree is also part of the real sector, is still the risk. We all spoke about the insecurity, and we are evident to some of the killings in the past few weeks. So as long as some of these risks are still very evident, then lending to that sector will be very risky. So when you look at the sector allocation for lending, so it's surprising, you'll see that the oil sector that accounts for like 10% of GDP accounts for about 30% of the total lending within the banking sector goes to the oil and gas space. So when there's any shock, you see that accumulation of non-performing loan. But beyond insecurity, you also want to look at productivity. So when you look at yield per hectare, I spoke earlier about the productivity, yield per hectare regarding Nigeria, comparing that to other countries. So it's still very low. So it may not make any business sense. By the time you are looking at the return on the fund, you may not be able to pay back those loans. Yes, we've seen like the crowdfunding system that is being used to fund, but still has its element of risk. For most of the farmers don't have insurance. You can look at this year, there was flood across the northern region. So if you have channeled funds to rice farming, it means that you would have accumulated significant loss. So there's still no confidence. What government needs to also do is to create that framework that will enable even the private sector to lend to that space. The CBN's agro borrowers lending program, yes, it's been growing, but when you look at the quantum of the amount, it may look very huge, but when you look at it as a proportion of our economy, so the multiplier effect is really very low. So we've not been able to see that traction. Yes, a lot of investment into rice, but there's also some form of, we need transparency. I would say we need transparency within that space to track the progress being achieved, so that would even encourage even the private sector to be part of that program. But once you can't be able to see that opaqueness is still there and you can't see how that progress is being achieved, then that would also continue to be a major concern to most of the private sector guys, especially the banks. So what most banks, what they look out for is short-term lending, where you can see the money clearly. Yes, it may have its inherent risk. I spoke earlier about oil and gas sector. So across the value chain, is it the downstream, midstream, or you want to do the upstream? Yes, it has its risk, but you can be able to gauge that within 6 months, 1 year, for some of those that are importing, you can be able to lend them that fund, and when they sell, they can pay you back. So as long as government does not take care of the inherent risk, insecurity is key. If we don't take care of that, the private sector will not be very confident to channel funds into the agri space. Thank you.
Thank you for that. We have recently gone into another recession, the second in the space of 5 years. Some school of thought have alluded to COVID as the trigger for the second recession. Although for those who will be closely watching, we are obviously, I think the fact is that we were obviously struggling even before COVID. So what COVID did perhaps was to unearth the latent challenges that were obviously belying the economy. Within that context, Ayo, I'll ask you again the second time. Do you think the policy responses of government, so both monetary and fiscal, were strong enough to support a faster recovery of the recovering growth this time around compared to the last time?
Okay, thanks for that interesting question. Yes, when you look at the quantum of funds that have been channeled both from the fiscal authorities and the monetary authorities, it may look significant, but when you look at it as a proportion of GDP, it's less than 5%. So when you're looking at the multiplier impact, it's really very low. Yes, we saw the Q3 2020 GDP data, looking at it based on expenditure. Yes, when you look at the Q3 data compared to Q2, the spending from government increased. Yes, served as a buffer, but because of the size of our economy, that could not have any major impact in saving us from a recession. So we all saw that major dip. So by and large, if you look at the impact, some of those, you look at from the CBN angle, part of what they had to even assist the bank to reduce the accumulation of non-performing loan is forbearances. So based on the CBN governor, about 35,000 customers' loans have been restructured, which is about over 60% of the total loan in the banking industry. So that is to just reduce the impact of COVID on the books of the banks. But when you also want to look at what impact would that have on their revenue, it means that they've either reduced the income that is expected from those companies and also increased the tenor of those loans. So that would, going into 2021, aligning with the presentation made earlier, the expectation gross earnings of the banks, especially interest income, will be impacted. Secondly, if you also look at some of the intervention funds of those critical sectors, we don't have that transmission mechanism is weak. We don't have the data. So by the time we are trying to track how some of these funds or palliatives that have been given, are we sure it got to the main, got to the I'll say the low income earners, let me put it that way, where that would have jumpstart the consumption expenditure of the private individual. Then to wrap up with the fiscal authorities, the government set up a structure, yes, palliative for the SMEs, trying to intervene and give them short-term funding, but it's still very minute. So the role of the private sector is really very critical for us to be able to have any meaningful growth. When you dissect the GDP data, private consumption and consumption expenditure is really the major part of our spending. So how do we drive spending? We need to first start with capturing the right data, having the right information. So if government decides that government wants to give palliative today, we should have that data that they credit the system. There are some developed clients, twice in a month, if they want to propel spending, they would give funds, channel funds to the low income earners, which they are expected to spend. So that would increase the demand. But if it's not getting to most of those that would spend it or that would be required to propel spending, then that would not be yielding, that won't yield any meaningful impact. And as a result, before we can achieve that growth above our population growth rate, we'll need to do a lot of. Thank you.
Okay, thank you for that, Ayo. I think at this point, it's you've said something that you've touched on something that I think is fundamental, which is who should be responsible for driving growth, and you referenced the private sector should be that engine. And at this point, I think I'll go over to Fola. So Fola, the work you do at the AFC, the supranational, financial institution, is one that seeks to provide infrastructure across Africa. Although I know that Nigeria is an outsized contributor to the balance sheet of that institution at founding. Could you shed some light or share your thoughts on how you think that Nigeria can address this structural time bomb where a disproportionate share of its population, largely youthful, is unemployed or underemployed? At least going by the NBS data, I think it's somewhere around 57% when we look at the combined data. A situation where the economy is experiencing stagflation, which is essentially high inflation, high unemployment, and low growth. How do you think, from the broader context, Nigeria needs to address this problem? And, are there things you think that the work you're doing at AFC in terms of infrastructure can help unlock some of that opportunity?
Thanks. Thank you, Victor. And thank you, Afrinvest, for having me back to speak here. I'm pleased to be part of this. I was part of the original banking report many years ago when I used to work in Afrinvest in research. So it's good to see that the franchise has continued to grow strong and is even diversifying over the years. So well done, guys. To your question, Victor, I mean, I'll take a step back in terms of context. We talked about Nigeria again going into a recession in the last couple of months. The news just came out in the last week or so. The reality is that Nigeria never really came out of the last recession, and I think this is an important point to note. I mean, just from doing business in Nigeria, and we at AFC we do business across the continent in multiple African countries, financing infrastructure, heavy industry, and large projects, generally speaking. And I have to say, Nigeria never really came out of the last recession a few years ago. And really, we've been struggling in the last few years to get back. And then you had COVID-19 and the global impact of that in terms of economic circumstances of the world. Now, what is the way out? My view is that Nigeria has been in a long-term structural recession for the last probably half decade, maybe even longer. And what is the way out of that situation? I think you have to be aware that what we're dealing with in Nigeria is a crisis of confidence. It's beyond a collapse in oil prices. It's beyond a change in global investor sentiment due to the COVID-19 pandemic. It's beyond any number of issues that people point to as to the reason why we are having difficulties attracting capital and dealing with this demographic time bomb, which you pointed out, which Kola articulated clearly, and Kola is working hard on providing solutions to. We're dealing with a long-term crisis of confidence. And what is that crisis of confidence? It's a crisis of confidence of investment in Nigeria, of savings and investment. And I always say that one of my favorite statistics is gross fixed investments to GDP, which I'll be quoting figures from the IMF, and they track this across all of the countries in the world essentially. Nigeria's most recent numbers less than 14%. That's gross fixed investment to GDP, which is a measure of all of the stock of savings and investments that are captured in Nigeria as a percentage of GDP. If you go to Gabon, which is one of the countries where AFC we've had the most success as an investor, we've had success in many African countries, including Nigeria, but the most success we've had has been in Gabon. That statistic is 30% on average over the years. Remember I said Nigeria less than 14%, so more than twice in Gabon. Cote d'Ivoire, another country where we've done very well, about 23%. India, a country we don't invest in, but I really like India because it shows you in many ways what Nigeria could be if we do things right. 31% on average, gross fixed investment to GDP. China, gold standard, obviously, on matters like this, 40% gross fixed investment to GDP. Even in the US and the EU, which are mature economies that are now consumption-led, they're driven more by consumption than by investment, 20%, still higher than in Nigeria, which is a growing, developing economy. Vietnam, very important Southeast Asian economy, 27% gross fixed investment to GDP. Bangladesh, about 31%. And if you simply doubled Nigeria from where we are, about 14% to 28%, you know what that works out to in terms of annual investment? It works out to about $60 billion in annual investment. So that's in annual gross fixed investment, new gross fixed investment coming into Nigeria on an annual basis, 60 billion. So that is a measure of the crisis of confidence that we're dealing with. And what is the source of this crisis of confidence? I mean, you talked about poverty and insecurity. I talked about poverty and insecurity, and your report, this year's banking report, is all about poverty being a source of insecurity. It's interesting, and I'm a fan of history. If you look at the history of development finance as a profession, and I work in development finance, the Bretton Woods institutions, the World Bank, the IMF, ultimately the IFC, all these institutions that do the work of development finance, that are the gold standard of development finance globally, they were founded because the leaders of the world understood that the only way to prevent insecurity at the time following the Second World War and the defeat of Germany in the Second World War, they understood that the only way to prevent insecurity, to prevent a return of instability, was to deal with inequality, was to deal with poverty, and to deal with the fact that Europe was devastated by war. And that's why they set up these institutions. And so it's very important to remember that there's a strong link between a lack of development and ultimately insecurity. So what we're seeing in terms of insecurity in Nigeria, which is beginning to crystallize as the primary source of the lack of confidence in doing business in Nigeria, is a failure to develop. And what is the impact for this on banks? I mean, we're here today talking about a banking sector report. I mean, when I first started working in finance, we used to say the hierarchy by which foreign investment comes into a country, and we focused at Afrinvest then, and I'm sure Afrinvest still does, very heavily on bringing foreign investment into Nigeria. The hierarchy by which foreign investment comes is first into the sovereign, right? So foreign investors first get comfortable with the sovereign as an issuer. The sovereign is well run. The sovereign has good macroeconomic management. Inflation is under control. The government has open and transparent books, and people understand what the sovereign is doing. So that's the first step. And then the next one is the subnationals, the states. The states are doing the same thing. They're transparent, they're open, they're well understood, they're rated. People understand what they're doing. That's the second level of confidence that investors seek. The third one is the banks. The financial institution, and then the other financial institutions, but primarily the banks, the insurers, the other financial institutions, the investment banks, merchant banks, stockbrokers. Investors understand those businesses from other countries, and then they look to see if they can replicate what they understand in a new market. And then infrastructure, which is where I work. Again, investors understand roads, bridges, power plants, heavy industry. They understand it from other markets, and then they want to replicate it in a new market. And so the same confidence that they're looking for from a well-organized, put together sovereign, subnational bank, other financial institutions, infrastructure, and then large industries, large commercial players, and ultimately SMEs, venture capital, small businesses, individuals. And that's the hierarchy of confidence in an economy. And I do think that we have a fractured situation where there is not even confidence in the sovereign to start with. And when you don't have confidence in the financial arrangement, in the organization, and in the way that the sovereign has set itself up to do business in the eyes of the world, in the eyes of the domestic financial markets, in the eyes of the local capital markets, you can imagine how hard it is for everybody else that is further down the hierarchy to establish that confidence. And so I do think that fundamentally, to go back to my original point, what we need to do is to fix this crisis of confidence in Nigeria's macroeconomic management, in Nigeria's sovereign financial situation, and just in the general perception and organization of Nigeria as an entity. And if we can fix it, we have evidence, as we've seen in the past, early after the return of democracy into Nigeria. And I was part of that growth period. I'd just come out of school, and I grew into that environment. If we can get that confidence back, I was muted towards the end there, but I hope that my point came across. Thank you.
Around 0.1%, and for the federal government, equity market, and we reduce the volatility in the equity market since we have more of the local investors. Also looking at the going forward, what are the ways where we can encourage the investors? Now, as much as we have the local investors coming in and they're positioning in the equity market, we don't really have that number as opposed to the population of those we expect to be in the market. We still need to do a lot of education, synthesizing the local, especially the retail investors, to have an idea of what the market has to offer. Yes, a lot of them would always want to see what they can get to double their money or get investment, but also they need to understand how the investment world works, how the sentiments around investment, because we really have a lot of the companies who their books have very, we can see positive performances where they can latch onto and increase their wealth. So right now, a lot of sentiment around the equity market is basically going around for most of the people that are in the equity market, but because the fixed income market is no longer giving them that yield as expected, and as such, they saw that the yield in the equity market was short. The boom came in a short period than they expected. Most of them positioned for 6 to 1 year horizon, but in the shortest time, they saw that the market bounced and rebounded and did better than what they expected. So this has always been the motivation for the local investor, and we expect that to see more of them going by the financial year-end report outlook. Thank you.
Thank you, Taiwo. Sorry, if we actually lost the panelists who were online for a while. We had internet issues, and so Fola, we just caught the tail end of your submission. I'll go quickly to Anhad, and given the constraints of time, would make it a bit more accelerated. Anhad, you also play in the infrastructure space. Although I recognize that you don't do large infrastructure projects, you do smaller sized with a shorter time to delivery. Can you talk to us about how you perceive the Nigeria growth story and how you think that the activities of Africa Plus as an infrastructure partner is able to help catalyze investment and therefore create opportunities for growth in an economy that is really, really struggling for growth?
Thank you. And thank you, Afrinvest and ICANN team for having me on. My good friend Fola actually said a lot about where infrastructure fits in and how the pieces come together. But I would like to talk, just use as a reference the keynote speaker's main point about income inequality, which basically underpins the whole conversation. And what you have is income inequality is now a global issue, again, at a scale that is unprecedented, right? They use the examples of 18th century France or just before the 1920s, where the top 10% or the top 5% control 90% of the economy. Now, this is happening globally outside Nigeria as well. So in that sort of a situation, and now capital moves much faster than it did 10 years ago. So the minute there's something attractive in a different country, everyone's money moves and runs and does what it needs to. So with all of that in mind, for us in the sector we're in, the opportunity is immense because of the reason that there is such little state-supported infrastructure development that has happened. There are so few successful programs over the last 10 to 15 years that have taken off in Nigeria, that the demand is significant. I mean, whether we're looking in the power sector, whether it's student housing, it comes down to more, can we structure the opportunity correctly rather than whether the opportunity exists? And I think that's the same for anybody who's on the ground and looking at the infrastructure sector. The other thing is because we are here, apart from me, of course, I'm in London right now because of COVID, but because we're based in Nigeria and because we're on the ground, opportunities are not the issue. And I think what the private sector can do, what AIPF can do, how we can create examples. And I don't think we can be anything more than examples of projects that have succeeded. Because to generate the amount of capital that Fola has mentioned, the $60 billion a year, it's not just that the money is not available, it's also the investable opportunity, right? So where do, you have your 60 billion coming in, where do they deploy it? Right? As you were saying, when it was risk-free at 15, 16%, it was a no-brainer. Now risk-free is down. Do you buy everything into the stock market? I love the example as well that was used to show the Nigerian stock market has been so successful. And right above it was NASDAQ as the next most successful. And why is NASDAQ the next most successful? Tech stocks, right? So you look at, I'm trying to think of the example, Tesla. Tesla is worth $550 billion right now. Tesla's price to earnings ratio is 30 times. So this whole global stock market boom is a mirage. There is no economic development that has led to that boom. It's just free dollars leading somewhere. So Nigeria, Nigeria to move from where we are now to create the environment where, infrastructure development, and it has to be far beyond what AIPF does. I mean, we're going to be at 40 billion between our first fund and the first close of our second. Our second fund is 200 billion. I mean, let's assume we managed to raise, 300 billion and we invest it. It's still a drop in the ocean. It will require significant government involvement, and we need to think about Keynesian economics, where it's about government-led infrastructure development. It's not just the government investing; it's things like the central bank changing the classification of infrastructure assets so that banks can lend against it, right? So one of the big things that India did, and I love Fola using the example of India, where incidentally 40% of the employment is still agriculture, by the way, even though it is an industrializing nation. The thing that India did, which I think needs to happen a lot for this income inequality thing to really be faced head on. And I think in Nigeria, it's about basic infrastructure. So one of the things that India did was recognize infrastructure assets. So things like toll collection revenue, things like student housing revenue as an asset that a bank can lend against on its balance sheet. So it changed the structure of lending and it reformed the structure of lending throughout India with infrastructure and domestic infrastructure. So I think Nigeria and the central bank needs to take a good, long, hard look at what are those changes that they can do that would facilitate lending and recognizing project finance as a whole area. And it's I know we listed those 8 banks, but if I looked across which of those 8 banks have actually done project finance, which is what's required for this infrastructure development to happen, and which of them have done it in a large scale, excluding oil and gas, because it's very easy to lend against oil and gas, but actual pure infrastructure lending, it's minuscule. It takes the likes of AFC, and the other pure development financial institutions to do that. And I think till the banking sector is able to actively stimulate this, you're going to have the same problem of complete lack of infrastructure. Because I think any income inequality conversation needs to begin with, can I get to work? Do I have power in my house? Do I get food tomorrow? So I think that's where my focus would be. Thank you.
Thank you for that. And I think we'll be rounding up now. And what I'll do is I'll put the same question across to everyone, and I will start with Fola, with Kola rather. Kola, please. Governments across Nigeria are currently facing the severe, resource challenges, which means there is not enough money to throw at problems, including hiring and paying high-quality teachers, providing school materials, and building the required infrastructure. How can we, therefore, enable sustainable investments in the education sector and in other sectors that can help, ameliorate the rather, dire situation we find ourselves? So, Kola, you go first, and then Fola next.
So I think first and foremost, going back to what we did, is you have to understand the risks. Because if the public sector doesn't have the capital, there really is only one place that the capital will come from. That's the private sector. So with Babban Gona, we spent 2 years before we lent 1 kobo to a farmer, understanding the risks of lending to that specific client, the small-scale maize farmer. That enabled us to develop what we call our 8 levels of risk mitigation, which is a holistic risk mitigation mechanism that has allowed us to deploy tens of millions of dollars to, I think we provided over 200,000 discrete loans to smallholder farmers and achieve a 99% repayment rate. What that has created is a scenario now where investors have the confidence to actually now significantly scale up the investment. We're actually in the process right now of raising and closing a $19 million round that will enable us to scale up to support nearly 500,000 smallholder farmers today. And that is because we have understood the risks. I think the former panelists talked about a litany of different risks associated with agriculture. Yes, there are risks in everything you do. But to specifically the example he gave, this year I financed rice farmers, and yes, some of those farmers were flooded due to the floods, but was I protected with insurance? Yes. Is my investment safe? Yes. And you can create with the right approach, you can create a financially sustainable mechanism that can attract in today tens of millions of dollars. But for us, the vision is more around how do you actually unlock the potential of the entire sector. In agriculture today, it's a $40 billion opportunity that we've demonstrated now going into our 10th year that you can lend and ensure you can make a good return and manage the risk.
Thank you. Thank you for that. Fola, you have 2 minutes to also try and marshal your thoughts on this.
Thanks, Victor. I think, Kola started by talking about how much time they spend preparing. And you really can't get away without, good preparation. It's the same thing in infrastructure, which is the area where I work. And it's the same thing with, development and attracting capital, generally speaking. And unfortunately, even though we don't have time, everything we need to do in Nigeria needed to have been done yesterday, it is still the case that there is an amount of time that needs to be spent preparing and putting Nigeria on a strong footing, both at the federal level and each of the states. I mean, one of my friends, I think, was supposed to be on this panel, and I was looking forward to hear from him, Ayodeji Ebo, and I think I saw him on it a while ago. He's doing that work in Ekiti State at the moment as a Commissioner of Finance, of preparing the state, of working together with private parties, with consultants, private partners, to put in place all of those building blocks. And it's more than I can talk about in 2 minutes. All of those building blocks that give confidence to financial market counterparts, and not just financial market counterparts, also development finance counterparts, also donors, funding counterparts all over the world who are looking to be a part of development work in places like Nigeria. And there is a fair amount of work that needs to be done to prepare and to get them into your system. However, it's not as though you can't do anything while you're preparing. If you say, we're spending 1 year preparing, doesn't mean that you can't do anything in that 1 year. There are many things that we need to stop doing, which are the things that signal to the market that there is a new direction that a country or a state or a business, a sector is taking. And we know what those things are in terms of the things that we need to stop doing, whether it's in relation to subsidies that are inefficient and are not achieving their objective, whether it is in relation to revenue leakages within the government, whether it's in relation to policies that are not helpful as far as market pricing of commodities is concerned. So we need to signal by stopping those things while also preparing ourselves with the right studies and the right policies for attracting capital from these various sources. This work is going on in many parts of Nigeria as we speak. As I said, I wish Ayodeji Ebo was on here to speak about what they're doing in Ekiti State and a number of other states as well that are putting in that work to attract capital that is not government finance.
Thank you, Fola. Mr. Liman, again, just taking up on that point, Fola did mention, for example, development partners and how, we can perhaps not just in the things we need to do, but in the things we need to stop doing. What are your thoughts in, 2 minutes or a little more, just to, again, point us to say, look, given the lack of resources on the part of government, how can government then bring in the private sector to help catalyze the investments needed to drive education and healthcare and infrastructure?
So I think I'm speaking for basic education now, not higher education. It's not a business-friendly sector because the large population cannot afford to pay for basic education. And I think the World Bank in Northern Nigeria now has made available $500 million loan to state governments that access, and that loan is available for primary education. The challenge with that loan, like most government access to funds is the way the loan is used for primary education. I'll give you an example in Adamawa and Gombe State, where we are funded by USAID for the same lower primary. So we have a set of local governments. We have 10 local governments, and the state has 10. We are funded by USAID. They are funded by World Bank. What we are seeing is for the same textbook and materials we are purchasing at X amounts, the government system just blows it almost twice for the same supplies. So we are kind of having a clear example of, even if you put funding from private sector, how are you sure the government will use it to promote education? This is the reality of what's going on. What we suggest, and maybe is going to happen, is that the contribution from parents increases significantly to compensate for government. Global standard for education funding by UNESCO is supposed to be 24% of your budget. In no state in Nigeria, not even Lagos, gives that amount. Many of our states in the north give less than 6% because of other important needs. So maybe to get the citizens to contribute more, if what Kola and the other ones are talking about, farming is working, then farmers will have more money in their hands, and perhaps they can increase their out-of-pocket costs for education, because there's no way the government can carry that.
That's a very valid, submission, and I think that perhaps is one of the objectives that Babban Gona obviously has as a way to improve outcomes. Anna, do you want to chip in on this point as well? Given the paucity of resources for governments, what should Nigeria start doing to crowd in private sector investments? In getting things.
I think I'd build on Fola's point and kind of add to that is a sense of stability. So basically, government policy is consistent. I mean, if I talk about what has happened with the currency exchange issue over the last, 6 days, forget about 6 weeks, you hear something new every 20, 30 minutes. First of all, they said you can't transfer money between bank accounts, within the same bank. And what was sad was we had the banks we're talking about acting like they didn't know what was going on. I know this because some of our staff had this issue where they were transferring money between accounts and their own bank was telling them, oh, it's, the internet is down or this is that. I mean, when you get a situation where the existing bank won't let you access your own capital because the government has not been cleared on controls, what message are you sending? And what's sad is it's a repetition of the same thing when we reach the situation in globally, not just Nigeria. Whenever there is a crisis on the currency, what happens? The government has to put in controls. How do they put the controls in? They try and be very selective. Initially, it benefits a few, then it benefits the many, and it's just messy and all the way through. In hindsight, if the government had made these changes and said, okay, this is the bit of medicine, we all have to take it, we're telling you up front, everybody must take it. It's much easier to stomach than now where things are changing every week, every 2 weeks, every 3 weeks. So my wish for next year is just be consistent. Just be clear and say, hey, our currency is in trouble. We're going to go to 500. These are the sectors that are going to be hit. We're going to give them these benefits so that they're okay, because you can't go to that and not worry about what the common man will pay. It's just facing the truth and being very clear and consistent. And I say the same for the banks, and it's the same for us, to our own pension fund investors, right? Pension funds have invested in us. They invested in other vehicles. And what do pension funds want? I hear always government saying and us and private sector people saying pension funds aren't investing. Well, the reason pension funds are not investing is they want consistency. They're not even saying I want 50% on my money. They're not saying double my money. What they always say whenever we have a discussion with them is, please don't lose my money. It's never, oh, you gave me a yield of 30%. Oh, that's great, but please don't lose my money. And I think that messaging, which goes back to Fola's original point of, you have to first create a government that can be trusted, that an investor can look at. I mean, we talk about Zambia's debt being defaulted I think at the start of this year. I think they've restructured it. Now we're getting to the stage where a lot of African government debts are going to be called. And where does Nigeria want to position itself in this in terms of giving hope and confidence to investors? Because I'm telling you, it's the same problem for the European investors. They're looking for yield, right? They're also not sitting in their domestic market and saying, let me put my money in this, because there's nothing. They're also, right now, as in a foreign bank account, you'll be lucky if you get above 0.1% or 0.2% on a yield. So all of those guys would love to come to Nigeria if the government turned around and said, if you want to take your money out, this is the way you take your money out. You'll have to wait 50 days. Why is China able to do that? Because they're consistent. They're probably the most restrictive regime when it comes to capital going inside and outside the country. And I know the Nigerian government can easily copy all of the things they have. And people complained initially and said, China is this and China is that. But eventually everyone fell in line because they were consistent. And I think that one word is what we want to look for. Thank you.
Consistency. Taiwo, in 2 quick minutes, what are your thoughts?
Okay, just like I mentioned earlier about the investors, boosting the investors' confidence in the capital market. First of all, we have to look at how much the local investors have contributed to the capital market, from a percentage of over 40%, now at 71% of the local investors. How do you retain these people in the capital market? One, the online platform where these investors can come into trading, must provide a robust online system for them, so that at the end in time they go online to do any form of investment that suits them. They also have access to a form of artificial intelligence algorithm trading, where you can give them a kind of forecast on their investment. And again, as an investor, you have invested so much money. We've seen like over 4 trillion in the last 5 months in the capital market, in the equity market. Do you want this money out, or do you want to still retain them? To retain this, what would you do? Investors are looking forward to their dividend on their investment. They have been advocating e-dividend mandate for a long time now. I think it's high time we actually implement this process seamlessly, so that come next year, by the time companies are declaring their end-year dividend, these investors can get this directly paid into their account, and this can also motivate them to invest more. These are more ways. And finally, I would say that investors' education is also very important. As much as we have players in the market, there are not enough of them. A lot of people don't even have an idea what it is. It trickles down even to the people at the bottom of the pyramid. If you go down there are many ways we can go down. If you one-on-one going to the market to advocate and educate them on the market. It trickles down to even to their businesses. And if your business is doing well by virtue of what you know, it will trickle down to you coming down to invest. So that's one of the ways we can encourage a local investment. Thank you.
No notes, Ayo.
Okay, thanks. Just to add to what has been said, I think Kola hit the nail on the head that we look at for the banking sector, for instance, we need to begin to have banks that would develop specialized skill in certain sector of the economy. So banks need to be known for a particular sector. Over time, you understand the risk within that sector, you understand the cash flow, and you'll be able to mitigate against it. We're all discussing, we've all come to a consensus that the private sector will be the main driver of this economy, and the banks have that balance sheet to support. But there needs to be more understanding about the different segments of the economy to provide that support, so that the non-performing loan can also be minimized. Also looking at, lastly, from the fiscal angle, providing confidence. Enforcement of contract is really very critical. If we want to attract foreign direct investment, if you look at the data, that's continued to thin out, and we are really not bothered. If we want to drive this economy, that private investment, both foreign and domestic, is critical to growing this economy. So if we don't provide that enforcement of contract, consistency, which we spoke about, then most of the foreign investors would prefer to set up within neighboring countries. After it's, that's African Continental Free Trade Zone, would be kicking up early next year. Our manufacturing companies positioned to take advantage.
yes, we may not have that high quality of product, but there are African countries that will still be very happy with the quality of product that we have that we can export to. But we are really not prepared, and if we don't come up with deliberate policy and implement those policies, providing that consistency and that direction, then we would continue to, I think like Fola said, pre-COVID, the growth rate was still very fragile. And now the target of government is to see how we want to get to positive growth rate. But it's beyond just getting to that positive growth rate. How do we achieve a growth rate that would take more people out of poverty? So as long as we don't attain that higher growth rate above population growth rate, then the insecurity problem will continue to be a challenge. And once that continues to increase, FDIs, both private, both local and foreign direct investors, will not be comfortable to invest. Thank you.
Thank you, Ayo. I understand the keynote speaker, Professor Osita, is still on. Perhaps you would like, sir, to maybe make an intervention for 2 to 3 minutes based on all of the things you've heard that has been said.
Thank you very much. Can you hear me, Mr. Moderator?
I can hear you, sir, loud and clear.
Okay. Well, it's very interesting. You know, we always say the private sector will be the driver of the economy. But you know, the economy has to be there for even, you know, you have to have a car for a driver to drive the car. And I think all that has been said boils down to the fact that at the stage at which we are in Nigeria, you still need an intelligent entrepreneurial state, both at the federal and state levels. The absence of this will take you nowhere. The private sector actually cues in from where the government has provided a clear direction and guidance. And so I think it's extremely important that that point be made emphatically. And when we make that point, it's not just about the federal government, it's also about what operates at the state. In fact, this inequality that I addressed should be a major concern of state governments, because primary education, secondary education are really within the domain of state governments. So I listened attentively to our colleague from the North, and I would say that not 20%, not 30% of the budget of most state governors should go to education. Because with absence of this, you are even generating, by the way, there are scarcity of highly skilled Nigerians. There are jobs that exist that are looking for good people. So we must take this education thing quite seriously if we're going to deal with issues of insecurity and poverty. And so those of us, or those of them that have spoken about confidence-inducing states, I used to tell them that when we were in government during Obasanjo, that with the so-called famous economic team, what we gave Nigerians was basically confidence. We spoke, people understood clearly where we were going. It seemed like people were intelligent. I was the deputy leader of that economic team. And, you know, people keyed in. Foreign investors felt, yeah, we think these people know what they are doing. So it's important that you have a state that, you know, makes sense. Finally, I think we have not made good use of our development banks, the NIDBs, the agri banks, and so on. If you look at China, many of these developing countries, they use their banks, development banks, to direct resources. My thesis is that without a robust manufacturing sector, you can't lift people out of poverty. And so you need clear entrepreneurial zeal, you know, directed by the state, organized and championed by these development banks to really drive the manufacturing sector, to expand it. I mean, 10, 12% of GDP in manufacturing sector contribution cannot take us anywhere. It has never taken anybody anywhere. And so whether it is India or Malaysia or China, you have to raise that to close to 30, 40%. And so I think the emphasis on the state needs to be one that everyone should appreciate. Thank you very much.
Thank you very much. I would like to bring this all to a close. It's been almost an hour-long conversation with different perspectives from all of the participants, who I would like to really appreciate, especially for those who joined us virtually. Anhad, Kola, Fola, we thank you for your time. To Professor Osita, we want to appreciate you as well. Thank you for that excellent keynote speech and address. And I think the message is clear. Nigeria needs to really prioritize education and investments, primarily driven by the private sector, in order to create the opportunities to help give our people productive use of their energies and help mitigate the risks that insecurity presents. I think at this point, I'll perhaps invite the compare back on stage to continue to direct affairs. Thank you, everyone.
Thank you.